Hello viewers, in this video I'll be going over natural gas, or the ETF that tracks natural gas, UNG. So tomorrow will be the EIA report for natural gas. They will announce their weekly storage numbers, and the forecast will be a withdrawal of 141. But in the immediate term, I believe natural gas will be heading down. Reason why, in this 1 hour chart, we have the 200-hour moving average, and that acts as a pretty good support, and we haven't hit it there yet. And it looks like overnight it's going to hit the 9-hour moving average and fall further down. So that's our first support, and where I believe natural gas will be headed to in the next coming days will be on the daily chart, the 50-day moving average, this yellow line, and that is about a movement of from now to then will be approximately, I'll say 3%, a rough estimate. So after hitting support overnight or in the morning, it will rebound depending on how well the report is, bullish or bearish. So that'll depend on the withdrawal numbers. So in my next module, I'll point out why natural gas will be heading up. So we have the current chart right here and the other trend that we will be comparing it to. So we have the trend, the current trend, we have a bounce off the bottom Bollinger Band right here. And on the other trend, we have a bounce and touching the bottom Bollinger Band several times on this chart right here as well. Bollinger Band is used to measure price level and volatility, and we see after hitting the bottom Bollinger Band, it got a nice pop up above the middle Bollinger Band, make this purple, and we see that action right here as well. So make this purple, and then after popping up above the middle Bollinger Band, you see it retreating back down, making lower lows back down here, touching the bottom Bollinger Band, and on here it made lower lows on the other trend down here as well. So after touching the bottom Bollinger Band twice already, it gained strength to touch the upper Bollinger Band right here. Make this red. So you see a firm trend, an upward trend, after touching the Bollinger Band twice. And let's make those changes down here as well. Hitting the upper Bollinger Band, and we got a strong trend up right here. So after hitting the upper Bollinger Band, we see an action of retreating back to the middle Bollinger Band, and it looks like as though this trend is slightly ahead of the current trend, so there will be a slight lag in the forecast model. The forecast model we have right here. This is day 0, day 1, day 2, day 3, day 4, day 5, day 6, day 7. It looks like after several days of heading up, the trend that we took a look at was May 15th to February 17th, 2009. It will be down approximately 10%, which is pretty crazy. There could be a chance that definitely happened. It happened in the past. It happened at that time frame in the past. So I will be very cautious wherever you are long or short. So again, this trend is further out in the future compared to this. So it may be several days before this trend will be down to approximately 10%. That is 18%. Yes. So if you enjoy this content, feel free to like, subscribe, and comment. Thank you for watching.